Well, hey, I have some questions today from the community, actually. I'm going to get my phone out here so I can get my list of questions. Cambria joined the community this last week. I've been working with her, getting her and Dave set up, and they've already started buying Bitcoin, but now they want to know, they're moving to the next steps. Like, how do they secure it? Where should they keep it? How much should they buy? What should they do with the other money they've got saved up? So I'm going to pull
I think
hers up
yesterday was
here.
Dave's birthday, wasn't it?
Was it really? I didn't
I believe so.
notice. Haven't been on Facebook or anything that would tell me that for like the last, well, I was on there yesterday, but I didn't don't remember getting a notification. Okay. Got to remember where I saved this.
The questions.
Yeah. Her questions in particular.
Yeah.
Found it. Okay. I'm just going to read her post first.
Okay.
So this was on my post this last week where I was asking everybody in the First Step Bitcoin community, if there's one thing you could get my help with, what would it be, right? Want to make sure I'm making some content that the people that are active there are interested in, right? So she asked this is her post. We are totally new to Bitcoin and investing. We have a healthy savings that would be better served earning money than sitting in a savings account. Where do we start? How much should go toward Bitcoin? What other investing avenues are safe and effective? Great question. We can play the long game, put money away and not touch it for years. I think we don't know where to start and what's safe, so we don't do anything. I think we worry about losing everything we have, so we just keep it where it's at, not building and not making us anything, but not hurting us either, which is like such a good.
Still, yeah.
Yeah. I mean, she is not alone.
Yeah.
Her and
No,
Dave
that's
are where
90%.
so many people are. It's just like there's so much information out there. Where do we start? How much do we do it with? And that is one of the biggest questions I want to help people with and help them answer in First Step Bitcoin, right? But I definitely want to address those questions. I did another post today that will kind of lead into this. The post was titled Unpopular Opinion, Bitcoin is the first place you should invest. And it really is. So that is for her first question. Where do we start? Bitcoin is where you start. I would tell everybody this. Bitcoin is the first place you should start. And I will tell you why. For two reasons. One, Bitcoin is the best low risk, high reward investment I have ever seen. And the reason it's low risk, first of all, you want low risk. Let me tell people why you want low risk, high reward investments. Low risk, really rule number one in investing from all the great investors that I've studied is you want to protect your capital. You want to protect the money, the original money you put in. You don't want to put that at risk, right? And so you don't want any wild, fantastic, unproven, unsafe investments, right? You don't want something that people are promising you these ridiculous rewards, but there is no proven track record of these things. Like it is, you're totally taking a huge risk putting money into these things.
And if it sounds too good to be true, it's too good to be true.
Exactly. It most likely is. Maybe you don't understand it, but that's the other thing. There's a lot of rules that go along with this that I need to make some other videos up, like who you should be investing with, who you should not be investing with, right? You shouldn't be investing with people that make money when they sell you things. And I'll talk about this a little bit more. People who get paid commissions to sell you investments, they don't have any skin in the game. They make their money by selling you the investment, whether it does good or bad. You want to invest with people who have skin in the game. They are invested in the things they're telling you to invest in. And if your investments take a hit, so do theirs, right? If their investments do good, so do yours, right? So you want people who have experience too. Like I've put some money into some ventures with some people who they were very new at what they were doing, and we lost that money. Right? Gone and done some investments on my own and created some things where I myself and other people put money in, and it didn't do very well because we didn't have experience in those things. So you want to invest with someone who has skin in the game, someone who makes money when you make money, loses when you lose, and someone who has experience in those investments. So these are all things that lend to why you'd want to do this with Bitcoin. Bitcoin has a fantastic record over the last 16 years of keeping people's money safe, meaning it's low risk. and providing a very high reward, higher than anything else out there over the last 16 years. And it's going to continue to do so. It's going to continue to be a low risk, high reward. One of the reasons it's going to be low risk is because Bitcoin runs on the world's most powerful network. It's the most powerful and the safest network in the world. It is, and it's been through hack after hack after hack. It only gets stronger every time there's even something that gets close to being an exploit. It actually helps the developers of Bitcoin, all the Bitcoin community, come in and say, oh, we gotta button up this hole right here. And so the attacks have actually made it stronger. So now you have the most powerful network, has the most energy, most computing power, and it's also the safest because it's been battle hardened, battle tested, right? It's been through the grind. Is It's only gotten stronger as a result. So that is one of the reasons that it is a low risk investment. And then reasons why it's high reward is its returns. I mean, its returns have been fantastic. And what most people probably don't understand about Bitcoin, what drives its value, and that's another important point to understand too, is you don't just want the number, the amount of your money to grow. You want its buying power to grow. You want its value to grow. Right? You can put money in bonds, for example, and it will grow over time. So you'll put $1,000 in bonds, and 10 years from now, it may show a face value or a worth of, let's say, $1,300. So you went from 1,000 to 1,300. To most people, you're thinking, oh, that's good. But what you need to think is it's not just the amount, not just that number go up. Did the value go up? Did the buying power go up? Did your ability to use that money in that investment, did it grow in its ability to buy things that you need? So if I spend $100 here in 2025 to buy a bag full of groceries that I eat on a regular basis, right? And then I go and I buy that same amount of groceries in 2035,
Identical items.
identical items. It may cost me $200. And this is a theoretical example. There's definitely been periods of time where it's been more than that, right? It's more
Yeah,
than doubled in 10
right.
years. But I think if you look in the last 5 years since COVID, there are definitely
Inflation
some
was
things that
terrible.
we are paying
Yeah,
twice as much for as we used to,
yeah.
right? Not everything. I don't know that
Well, there are
inflation's been
some
that
things.
high,
Yeah,
but there are some things. You know, if you go out to eat, I feel like we're paying close to twice as much as we used to 6 years ago. And it's funny, you'll look on Google Maps. You know, I do a lot of posting on Google Maps for restaurants, writing reviews, whatever. And I'll look at the menus, and I'll look at something, and go, what? It's only $6.99 for a lunch combo, and then I look, and that picture was posted 6 years ago, right? I'm like, oh,
yeah.
right? And then I try to find, when I see that, I usually try to find something more updated because I'm so curious. And sure enough, you look at it now and it's like $12.99, $13.99, $14.99 for the same lunch combo. So some things have gone up. So going back to value, you need something that's just not going to grow the dollar amount of your investment. You need something that's going to grow the value. You need something that if in 2025, 2030, it's going to cost you $200 to buy what you pay $100 for today. You need an investment that is going to double your at least double, and hopefully more than that, right? You want something that if you put $1,000 into it now, you want it to be worth more than $2,000 in 2035, using that example, right? You want it to be worth, you want something that will grow that value over time, right? So Bitcoin is proven to do this. It is ahead of inflation. It's creating value. And it does this because it is using supply and demand. It was designed to do this. It was designed that there would be a set amount of Bitcoin made, and that a new amount would be distributed, or half each 4 years, a lesser amount would be distributed. So each 4 years, the amount that of new Bitcoin created is cut in half. So you're getting this dwindling supply, right? And there's only ever going to be 21 million made. So there's a set amount. And right now we're sitting, I don't know what, almost 20 million or something, like 95% of the Bitcoin that's ever going to be made has already been made. Over the next 10 years, another 4% will be made. And then over, 100 years, between 2034, 2035, and
Be the
2140, that last 1% is going to be made. So that supply is going to keep, the new supply coming in is going to be shrinking. at 95% right now, we're pretty dang close to almost all the Bitcoin that's ever going to made. So we have this set amount, but each year, each month, each day, new demand for Bitcoin is being created. So you have new users that want it. You have old users that want more. You have new types of users, whether it's governments or trust funds or investment funds or AIs or other businesses, municipalities. Everybody's starting to buy Bitcoin. So it's creating demand. You have a set supply and a growing demand. And everywhere you see this over time, you are going to see value grow, prices go, not just price go, uh, but the actual value, what you're able to buy 5 years, 10 years, 20 years from now is going to be greater than what you can buy now. And that is what you want in an investment. That's why you want to buy Bitcoin. If anybody watching this, if I could need to explain this better, please let us know in the comments, because I want to make sure that I want to make sure a third grader, an 8-year-old, a 10-year-old could understand what we're saying here, because understanding why you want to put your money into investments that grow the value or the buying power, the yet you have, and that are low risk, high reward investments. I want to make sure everybody understands that, because that is one of the most tricky parts of investing. And people use it, they sell investments to people through lies or leaving out information, right, about how these things work, right? And they do this because, going back to what I said earlier, they get paid to do this. They get paid to sell the investment. They don't get paid based on the results that they get or you get. They get paid on the how much did they sell of this, right? So they're motivated to make money in a way that is not in your best interest. Bitcoin is in your best interest. That is where you should start. That is the first place you should start putting money. You should start you should learn how to buy it. Come to First Step Bitcoin. I'm updating courses right now so that you can learn how to buy your first Bitcoin. And from there, you buy your first 500 and do HODL 520 and buy that first 500 of Bitcoin, move it to a safe wallet and hold it there, commit to hold it there for 20 years. And by doing this, you're going to learn some things about Bitcoin. They're going to help you to start thinking more long term. So Bitcoin is where you should start, Cambria, first and foremost. Okay. Now, next question: how much should go to Bitcoin? This is a question that's going to be, the answer is going to be different for everybody, right? A lot of it has to do with, are you going, I like to put it this way: if you put all your money into Bitcoin, are you going to be able to sleep at night? If not, you shouldn't put all your money in Bitcoin, right? You should put it in somewhere else. The other somewhere else that I would recommend, we'll get to that answer, but let me finish this thought. You should, you need to figure out how much you can reasonably put in there, and sleep at night, right? And I, the funny thing is, I think down the road, you're going to wish you had put more. I think most everybody, some people start with 1%, 5%, 10, 25, 50, whatever, or 100. But everybody that puts in like 50% or less is going to wish down the road that they had put more in. But there is a trade-off to like being able to, if it is going to drive you crazy, you need to put less in. You need to diversify a little bit more so that you have peace of mind, because you have to, it's going to ruin you. You're going to freak out, make bad
Eats you
decisions.
up. I mean, it's like being in debt, where it's always
Yes.
nagging thing in the
Oh,
back of your
yes.
head. And, I got this bill, this bill, this bill. I got this much money. I got to stretch this out. Oh, no, we can't go out to dinner. We can't do this, side trip or whatever, because we got to have that money to pay those bills. And that's the way it is with an investment that you're worried about too. It's just always nagging you.
Yeah.
So you do, as the more you invest, the more you learn to just, you know, put it in the
Quit
back.
looking at your investments. Yeah.
I
You
mean,
don't want
for
to see it
me,
too often.
it was
It'll drive you crazy.
S&P 500 index, and it was very safe, and it
Yeah.
was growing. It was always, every year it was up. And I was getting my RMDs back out of my K and IRA that were, larger every year than they were the year before. But the money that I was getting in the RMD wasn't worth as much. So,
Yeah.
that's the problem right there.
Yeah, it is a problem. All investments have a problem.
Yeah.
They all have trade-offs. They really do. And that's part of what you got to learn. The trade-offs for Bitcoin are so minimal. That's why I love it so much. There are some trade-offs there that quite frankly, there's a lot of other investments. When you put your money into stocks, bonds, mutual funds, you're putting it into a place that is a lot less what they will call liquid, right? And what liquid means is how easy can you change it into cash or something else that you can spend, right? And when you start to get into investing, you're going to put your money into places that are less liquid, that it's going to be harder to get that value back out of it into something you can spend when you need it. But that the trade-off there is that you're willing to add these extra steps and wait a little extra time to get the money, because over time it is a higher reward for having your money there than leaving it in a savings account. Um, if I was going to make a recommendation, I'm actually meeting with Cambria and Dave later this week. But I would say, without meeting you and talking yet about this, where do you start? Bitcoin. How much should go toward Bitcoin? I would say for you, it's probably going to be somewhere between 10, 25, and 50% should go into Bitcoin. All right. And we'll talk about that. Well, I'll create some materials to help people decide for themselves where they should be on that. And then, what other investing avenues are safe and effective? This is a tough question. There are definitely some out there. Some of these avenues are harder to get into, but one that you just mentioned, Dad, that I'm a big fan of, and it has also been proven over time to grow your value, not just keep your value, not lose value for you, but to grow value. And that's index funds. Like an S&P 500 index fund is really good. I like broader market ones because I feel like you get a little bit more growth from the smaller companies
Mhm.
in the economy. That's just my preference. The differences are pretty small. So I'm looking at an index fund, and I'm looking at something that has a super low expense fee. An expense fee is something that you are going to pay from your investment. It's like a management fee. So the people who
Yes.
control it get paid, right, for running their computers and whatever to keep your money. And there's some what they are called ETFs, exchange traded funds, where you can buy index funds. They're super cheap. As a matter of fact, most brokerages today, I recommend people use Fidelity. Fidelity has a whole list of ETFs that there's no transaction fee. There's no brokerage fee. You don't pay a fee to buy it. You don't pay a fee to sell it. Very nice. Plus the management fee of it, the expense ratio, as it's often called,
Very low.
it's very low. Like some of them are as low as 0.05%, right? Those Bitcoin ETFs that we're looking at, some of those are as low. They're on average probably like um 0.21%, 0.22, somewhere in there. And some are even lower. Some have no fees for like the first year till $1 billion in or whatever. So it's still zero point 0.2, like 1/5% is so super low. But you would be surprised, especially with like mutual funds, that it's very common to see mutual funds that have a 2% expense ratio. And that seems like not a big deal, right? 2% can be massive over time, right? So you really want as low of an expense as possible. So there's definitely some ETFs that are index funds that I would recommend. Vanguard VTI, that's a total market index, is very good. Another reason I mention this and recommend it is because it is another way to diversify. And when you put it into the S&P 500 index fund, you're investing in companies that are in all different types of businesses,
Right.
all different industries. They invest money in plants and people all over the world. They're invested in different economies. They really, it is a very good way to diversify.
Yeah.
Um,
And they do the research. You're not spending the time
yeah.
doing the
Well,
research.
they're not even doing research either. They're just maintaining. It's a set amount of companies, right?
Oh,
And
but
so that's
they
the
trade
thing.
them in and out. It's not
They do
always
the trading.
static.
Yeah, they
So,
balance it out so that,
right.
but it's not like a mutual fund where they're trying to pick winners and losers. They're just saying, nope, here's our basket. That's another thing. The guys who pick winners and losers over a 10-year period, they lose against index funds 92% of the time.
Yeah.
So just go with the index fund.
Yeah.
So take that out of the equation, go for lower expenses, because the guys who are going to pick winners and losers, they expect to get paid more too. So their expense ratio is going to be higher. So you definitely want, for that second thing to put money in, I would say you put that into an index fund. And that's going to diversify you very well. Those companies buy bonds, they buy stocks, they invest all over the world. Like I said, they are very diversified. When you buy VTI, you're investing in about 5,000 different companies that do business all over the world in all kinds of industries. You can't get a whole lot more diversified than that. Other places you can invest, another place that I will just mention here, I'm not going to get into too many details, but it's something that I call local wealth. And that is when you invest in like things like real estate, apartment buildings, homes for rental, local businesses like dry cleaners, things like that. This is another good place to put your money and that will grow your value over time. Now, I don't think that those investments are as low risk as an index
Really not.
fund or Bitcoin, but there are people out there going back. There are people who have mastered how to do this and they are looking for people to help them put money in. They know how to run the business. They need capital. They need money to run it. When you find people like that, who, to be honest, they're they don't pop up every day.
Right.
But that would be another place where you do it. But you're going to put less of your money into things like that. It's just the risk is a little bit higher. The reward can be a little bit higher too. I wouldn't say it's going to be as high as Bitcoin, but I think it's going to be higher than an index fund. But your risk goes up a little bit. But that's somewhere else you could do it. Or maybe you are really good at your own thing. Like my barber, Jesus, he is really good at he's bought and sold several barber shops. He knows how that business runs, that industry. He's been able to make a profit. He also he flips houses on the side, but he also does it in a way where he'll live in the house. He'll buy a house, he'll fix it up when he can sell it for the profit. You know, he has his exit strategies when he sells it for a profit. When he gets to a certain value and he can sell it for a certain amount of money, then he'll sell it and buy a new one and start the process over. And he's been very good at that. So if you have a skill like that, that is another good place to invest your money because you can grow the value, but you need to be honest with yourself. Are you really good at what you do? Are you really growing the value of that over time? Is the buying power of your money that you've put into those investments growing? Be honest with yourself, I would say. But those are some ideas. But let's keep it simple here for First Step Bitcoin. First place you should do is Bitcoin. How much? Somewhere between, for most people in here, 10 and 50%. Some of you are going to be in a place where you can do 100%. And the crazy thing is, over time, it is going to grow to be, because I don't think you should adjust it as you grow. You should just, whatever money you put into it, if you decide you're going to do 50-50, then every month or every week when you're when your automated buys are happening, put 50% into an index fund and 50% into Bitcoin. Don't adjust it down the road. Watch it grow. Pretty soon, Bitcoin, as it grows, it's going to be 70, 80,
Performing.
90% of your total portfolio. And you don't want to punish your winners. You don't want to take money out of something that is working that hard and that well for you. So anyways, that's are some other investing avenues. If you're keeping it safe, start with Bitcoin, start with an index fund like VTI, low expense ratio, a broad market. It's going to grow the value of your money. It's been proven to do this over time. It's one of the only things right now that you can invest in through Wall Street that has grown its value against inflation
Inflation.
over
It
time.
stayed ahead of
It hasn't done it by a ton, mind you, but it has grown your value. If you had bought gold or bonds or real estate investment trusts and things like that, those have not done as well over the last 25 years against inflation. They've been just below it, right? And so you don't want, because that is not a low risk. Bonds are not a low risk investment. If you're buying an investment that continually loses your buying power, your value, that is a high risk. Like if you're putting your money in just a savings account in the bank and you're letting inflation eat its buying power up, even though they're paying you and the number is going up in your account, but what you can buy with it is going down, that is a risky investment.
it. It is. But you
And they
can
don't,
still have that savings account though, because you need that to moderate life. You know, you can't put
yes,
everything into
absolutely.
Bitcoin because what
No.
you talked about earlier, the liquidity is not,
And the volatility.
and volatility. And so, yeah, actually, Bitcoin is very liquid, but
Yes.
is also extremely volatile. And
Yes.
so you have to ride that volatility out. But if you've got like our water heater went out and we needed money for the water heater, so, you know, we've got our savings account buffer where we could go out and buy the new water heater on that instead of getting
Right.
credit and going into debt or whatever.
Right.
So,
Cash has its purpose.
yeah, cash
US
has its
dollars, as we stand today, they still have a purpose and a place to be used well in someone's in
Right.
their financial plans for sure, in their money
Yeah.
plans. Absolutely. That's a great point. Because you want to have an emergency fund and you want to have something that is going to be more stable in terms of its price. Because the thing with Bitcoin that you also need to know is it is volatile. When we say volatile, we mean that the price of it goes up and down, and it can go up and down really high, go up really high, go down really low. And it can do that over short periods of time. So you can have, let's say, like $1
Thousands.
million of Bitcoin in an account, and 3 months later, it could be down to 400,000. It has and does happen, but also it's going to grow up to $2 million worth of value
Over time.
faster than anything I've ever seen over time. But you can't plan to meet expenses like broken water heaters when all of a sudden you're in one of those periods, your water heater breaks and Bitcoin's really down. So you do need to have some money. And I would say, especially over time, and I'll get more into this in another video, but you want to start working towards like 3 months of a 3 month buffer that you could live off of first. And then from there, you want to grow it to 6 months, and then a year, and then 2 years. And then I would say 3 years is probably as much as you ever need to do, because that'll allow you to ride out those waves of volatility with your other investments, because stocks are volatile too. The stocks are more volatile than cash. They have their ups and
Yeah,
downs.
a lot more.
There are big, what they call market corrections, where the price of everything in the market drops for a bunch of different reasons, bad news, good news, innovations, new technologies that wipe out old ones. It happens all the time. And so the price is not as stable. So you need that place to put your money, like an emergency fund, right? One, two, $3,000, $5,000, depending on how much, uh, where you live and what your expenses could possibly be. Have that in a cash place, and then start building up your your buffer, your living expense buffer, from 3 months to 6 months to a year, 2 years, 3 years. And you do this over time. You do that over
Yeah,
decades,
it's
right?
fast.
And here's the reason why you want to do something like that. In 2008, when we had the Great Recession, we had a big dump, the housing bubble burst, and the Wall Street values just plummeted, right? They just dropped like a rock. And there were people who were getting ready to retire or who had just retired, and that
Counting
saw,
on, yeah,
yeah,
return.
they were counting on that money being there, and they saw their investments, all their investments, which again, another reason not to buy bonds. I'm not a fan of bonds, is because, that's bonds are supposed to stabilize you in market periods where there's big corrections or big drops like that. And they didn't. They dropped like a rock in value too. So people that, had $1 million, $2 million, $3 million to retire on, woke up the next morning or weeks later or whatever, after the Great Recession really sunk in, and now they only had 1,000, or their 2 million had gone down to 1 million, or their 3 million had gone down to 1.5 or lower. And so now they're hurting.
But
But if they
housing
had
was
had,
way down too. That was the other
housing prices
thing.
were way
Yeah,
down too. There was, yeah, nobody was buying.
right.
So if they had had a 3 year buffer there, they would have been able to use that 3 year buffer to write it out, because within 2.5, like 2 years even, market prices had recovered and even grown several years after that. So you want to, over time, think in decades, not days, right? Don't think you've got to have this buffer fund set up in 3 months, right? Or a year or 2 years. Think in terms of decades. This is how I'm going to build it up over the next 2 decades, especially for younger families like Dave and Cambria, right? Take your time, make a reasonable plan that allow you to get there. That buffer fund, that living expense fund, is going to help you weather the volatility of all markets, right? So that covers the question of what other investing avenues are safe and effective. We can play the long game, put money away and not touch it for years. Awesome. Start doing that immediately. And again, if you don't know where to start, let's start with Bitcoin. Come to First Step Bitcoin. Let's get you buying Bitcoin. Let's get you to do a HODL 520, excuse me, and buy your first 500 of Bitcoin, move it to a safe Bitcoin only wallet, and commit to keep it there for 20 years. It's going to start working on your mind. You're going to see how Bitcoin works. You're going to notice Bitcoin more, and you're going to understand how Bitcoin rewards you and teaches you to think long term. You want to play the long game. The long game is where most people win. The everything is stacked against you in investing, especially with Wall Street, when you try to play the short game, right? They are the masters of that domain. They created it. They own it. It's theirs. You come and you play the short game in their house, they're going to stomp on you.
Yeah,
They want you to come in and take those risks because it's high risk, low reward for them. You may say, no, it is high reward because the potential of what you can win by doing this or by playing the lottery, for that matter of fact, is so high.
Right.
But the success rate of doing it is so
It's
low.
very low. Yeah.
Yeah, and you're trying to use your own skills and computer programs and algorithms to make these picks. Well, I guarantee you they have more experts, more analysts, more money, more systems, more software to play against you than you will ever have against them. And remember, some of these guys that have all that stuff, all that capital, all that know-how, all the systems, all the computers, they still lose 92% of the time
Yeah.
against an index fund.
Right.
So we have to be honest with ourselves, right? And we need to protect our money. We want to find low risk, high reward investments to put it in. Um, and I couldn't agree more. Just reading through Cambria's thing here again, they don't know where to start and they don't know what's safe, and so they don't do anything, right? And so this also hurts you because slowly but surely that money that you've worked hard for and that you've saved,
Just
that
being
you've
eaten away.
yeah, it's being eaten away by inflation, and you don't want that either because you've worked hard for it. You've done the right thing. Now it's time to take the next step. There's three money skills that I'm always going to be talking about that you need to manage. You need to learn how to increase the amount of money you make. You need to become more effective, more productive at earning money, right? You need to become really good at managing your money. And that means living within your means. So it means living on a budget. If you make 10,000, you should try to be spending $8,000 or less so that you can invest the rest. That's what managing your money really is creating a surplus to do the third money skill. And that's learning how to invest, learning how to make your money work for you, learning how to make your money grow its value, grow its buying power so that 10 years down the road, you can buy more with those investments than you could buy today, right? So the total power to buy it is going to be greater. And that's what you need to master those three skills. And that part of that third skill is finding the low risk, high reward investments like Bitcoin. And that is where you should start, right? Because you don't want to do anything. You hit the nail on the head with that. So, because you don't want to lose it. That's a very rare fear, a very real fear, worrying about losing your money in investments. Lots of people do. We all know somebody who made a high risk, low reward investment and got stung for it. And many of us have made them ourselves and gotten burnt. So, but great questions, Cambria. I thank you so much for joining the community. Thank you for bringing these questions because you are not alone. I know there's a lot of people that are in Bitcoin, First Step Bitcoin right now, and people that are going to be coming in, they're going to have the same exact questions. They're going to go, okay, where do I start? What do I do? And so these are some great answers for them. You have any closing thoughts, Dad?
One thing is I do have a high interest savings account where we keep our savings money instead of the
Mm,
bank. And so that's whatever savings that you've got. And it does take a day if you need to transfer money over, like we needed money for the
yeah,
water heater. So it still took a
that's the
day.
trade-off, right?
That's the trade off. But we knew what the water heater was going to be before the plumber ever came out and did the swap. So I could start the transfer transaction the day before.
Nice.
Bank interest is almost nothing in a savings account. And so that is a good place to put it. And it seems to be running about the same as you would get in a CD where you have no access to your money for
Right,
a whole big period, or you pay penalties if you get it out early. I'll
right.
post that on
Yeah, thank you.
First Step Bitcoin.
That'd be great. That's a good one. Another one that I'll add to that too, when we're talking about building up that buffer, that living expense, like a 3 months worth of living expenses to weather out storms, 6 months, a year, 2 years, 3 years. Another place that you want to put money like that long term that actually usually pays better than like a money market account or like you were using. But I would put your emergency funds in exactly where you're putting it, Dad. That's where I've put my emergency funds before, is in those money markets. It only takes a day or two to get the money out because you'll need to do that. But for the more long-term growth, there's something called TIPS. It's like an inflation protected security, something like that. It's a treasury bond that the government sells, and essentially they are paying you enough interest on those bonds to cover inflation. So it's actually a higher percent. Like if the CPI, which got as high as 7 or 8 just recently, they were paying 7 or 8% for people that own that. So when you're talking about those things that you're going to save for years and decades, but you want them as liquid as possible, that is a good place to put things like that for a longer term because you'll get a better return. I don't know that CPI is always accurate on what inflation is really at, but it's better than interest rates, right? And if you ever find that it's not, you can always switch it over to a money market account. If all of a sudden money market accounts are paying 10% for some reason, but the tips are only paying 6, 7, 8%, switch it over. It'll take you probably less than a week to make that switch. And if it switches again, you can switch it back and forth. You know what I mean?
And another point too is collect interest, don't pay interest. So pay your credit cards off every month. And if you think you need something on your credit card you're not going to be able to pay, then don't buy it, you know?
Yeah.
And
Yeah.
learn to save your money for things that you need. And then, you can go buy a car for cash. I mean, that sounds like a
Yeah.
big thing for somebody that's already deeply in debt. But if you get that savings mentality going and collecting interest, not paying interest, then you can set a goal and save for whatever new car you want. And then when you're ready, you can buy it for cash, and the same thing with almost everything else, it's don't carry interest that, or don't pay monthly interest on things like credit cards because,
Right.
I mean, that's just
It's
money out
bad debt.
for nothing.
There's some debt that you can use to actually grow your wealth and build money,
Well, there
right?
is,
Like
but
a
credit,
mortgage on
yeah,
a rental apartment, right? But you're right. Credit card is not
it's
growing
not
your
even
wealth.
deductible anymore
It's
for,
eating, yeah, it's
yeah,
eating your wealth. And yeah, that's part of that second skill I was talking about is learning to manage your money. So you want to remove things like credit card payments that are sucking your value out of you, that are taking money out of you. And I think a big part, what you were relating there to, Dad, is learn to distinguish between needs and wants, right? And wait till your assets can provide payment for your wants, right? Use your emergency funds and your funds now to buy things that you need, right? And don't use credit card debt to buy those types
right,
of things, right?
right.
And be patient.
Yeah.
Play the long game.
Yeah.
Think long term.
And it sounds like they're already there because they've been putting a lot of money away into savings. So they've probably already got that part of it mastered.
Yeah,
And now
for sure.
where to put it and make it
And
grow.
now how to make that money work harder for
Right.
them, right?
Pace and
A lower risk, higher reward place to put that money. Cool.
okay.
All right. Thanks, Dad. Appreciate you.
Okay. Love you, Aaron.
Yeah, I love you too. If you go eat any Korean this week, be sure and send me some pics.
Yeah. I'm not eating again till Wednesday or Thursday. So it'll be,
Oh yeah, that's funny. I'm on a fast day today too.
yeah.
I don't think I'll eat till Thursday actually.
Yeah. Yeah. Well, I ate Sunday, so I'm good for a few days.
You're good for a few more days.
Yeah.
Nice.
And
Awesome. All
actually,
right, Dad.
once you get over that hump of the first day, your hunger goes away pretty much.
It does. That
And,
the first day is the worst.
then
Yeah.
it's easier to be on the
Yeah,
diet than any other diet
it
I've
is.
ever been on. So,
Yeah,
yeah.
true. I've experienced the same.
Yeah. All right.
Cool.
Yep.
All
See you
right,
later.
Dad.
Okay.
Yep. Take care. Bye.
All right. Bye.